all the panelists in? IT, I saw IT's name, Mark Rowley. Who else inside? Charles.
Nasri, how are you?
Hey, hi, how are you?
Hey, thanks.
What time is it now in Georgia?
It's 9:20.
9:30 in the morning?
Yeah.
Okay, so it's
we are 4 hours behind, I guess.
It's early start to the day for you, or is it a normal day for you? Yeah.
It's normal.
But I can't see the same for New Zealand. Mark Rowley, are you there? They are 4 hours ahead of us, right? Mark, are you there? Yes, it's not in yet.
Yes, Hello? Mr. Mark is in.
Hi, Mark. This is Charles. Good afternoon.
How are you, Nasri?
Hey, hi.
How are
you? There you go. Finally get to see you. So what time is it now in New Zealand? It's 4 hours ahead, right? Oh, not too bad.
5 hours.
5
ahead,
hours.
Nasri.
Okay. So I'm standing between you and dinner. What time is your dinner usually in New Zealand?
Well, I have clients waiting, so we'll get this done and then we'll have a client dinner.
Oh, fantastic. Okay. So we have Charles also from Singapore. I see two Charles. One is Charles Xavier, younger version, and the other one is a Charles older version. So who am I speaking to now? The older or the younger version of Charles?
The older version.
The older version. All right. You see a very proud Singaporean there with the Singapore flag and the IFA and
yes,
the logo of the event. You're the most.
The country is always first. The country is on top.
Fantastic. So next time, IT and Mark, you got to flag your Georgian flag and your New Zealand flag respectively, yeah, in the next
Yes.
AI World Summit.
Noted.
Yes.
Noted.
So for audience who have tuned in, we have quite remarkable panel members here who are from 4 different countries. Of course, 3 different countries in this case. If Charles put on a Malaysian hat, then he will represent the Malaysian banking sector. One from Georgia, Central Asia. So IT Kukava, has a lot of experience in Central Asia, in Russia, right? And I've learned a lot from him. He received me well. He treated me so well when I was in Georgia twice in the last 2 years. So I had the experience of the mountains, the mineral water, the spring water, right? We almost went to the snow-capped mountains, but we didn't manage to go there, but we managed to visit all the beautiful places in Georgia itself. But of course, he's a very experienced in Central Asia, like Uzbekistan, right, and the likes of it, Kazakhstan. So a lot of observation on the banking sector there will be very interesting to know from IT. And then Mark is no stranger to the Singapore banking sector. When he first led the formation and the running of the Consumer Credit Singapore, Consumer Bureau Singapore, and after that, now he conquers and manages the banking sector through his credit information credit bureau setup in New Zealand. So he serves most, if not all, of the banks there, and certainly from New Zealand or at least ANZ perspective, we'll be able to hear how banks in New Zealand, Australia versus banks in Central Asia, Eastern Europe, Russia would have would need to innovate, or the challenges, the issues that they face, the opportunities that they should see. And Charles, formerly from Citibank, have dealt with thousands of vendors from all over the world. The city never sleeps, right, Charles? So you get to see from a buyer standpoint. So bankers are very shy to tell us about their experience in dealing with digital disruptions and all that. So we got a former banker who deals with technology for a global bank to share with us from a banker's perspective the kind of technological gaps, the kind of obstacles as well as opportunities that you see. Okay, but in either case, there'll be the demand and supply version of the banking perspective. There will also be the front end, mid office, and back office perspectives. So it's going to be quite Interesting for that. Oh, sorry, we have one more speaker. Zenon, of course. He'll be our first speaker. So Zenon is a very accomplished practitioner, and he's a director of Capronasia Research and Consulting. He provides fintech research and consulting services to big clients. Let me see, such as there were lists of banks that you get to see, and he was formerly also from Citibank, right? So we have a few Citi bankers here. So his clients included Oracle, IBM, SunGard, ACI, Macquarie, Bank of China, ANZ Bank, and so on. And right now, Capronasia appears to be originating from Shanghai, China. Is that right, Zenon?
Actually, in Singapore.
You're
Singapore with an office in Shanghai. That's correct.
Oh, fantastic. Okay, that's why you're going to be our first speaker to tell more about your setup. So, admin, I will start off in view of time. Let's start off with the following arrangement at my end. So, Zenon will be speaking and introducing himself, what he does, and what the AI innovation means to him and the banking sector, right? And we'll go through this process and flow across all the other speakers, and then we'll get into a series of Q&A with specific questions pertaining to the banking sector. Over to you, Zenon.
Great. Thank you for the kind introduction. And it is amazing to see so many Citibankers on the line, but it's kind of the unescapable bank that I think many of us either started our careers at or had worked at previously. Just briefly on my background to set the context, as mentioned before, I started off at Citibank in New York many years ago. I had studied computer science undergrad and worked in Citigroup in the US and in Europe for a number of years, always on the technology side. And so when I left, I was the head of technology for Citigroup in Portugal. Why do I say that? Well, you know, when I left the organization in 2003, technology was seen as a cost center. You know, certainly not an enabler of business. The other business heads in the organization would come to us and say, Zenon, how can we lower our costs? Not how can we help our revenues? And I think, you know, over the past 2 decades, we've seen a tremendous change, a shift away where now technology has a seat at the banking table and is a critical part of all of the banking decisions that are made in any large institution. I mean, certainly if you look at DBS here in Singapore is, at least on paper, one of the more innovative banks, certainly in the region, and if not globally. Having a head of innovation, it was one of the first banks where innovation was built into the KPIs of the individuals within the organization. And certainly over the past 10 years, as fintech has developed, it's been a critical part of that. I think what makes fintech really interesting these days is the ability of these new technologies like AI and blockchain to make a difference in the banking industry. And I can tell from some of my co-panelists, you know, we have a rich experience within the industry, and we've seen things change within the financial industry over the past few decades, and as fintech has come to be more kind of applied and used within the banking context. In certain places like Singapore, obviously, you know, in the next couple of weeks, we're expecting to hear decisions on the digital banks in Singapore and the licensing that will be the first kind of virtual only banks that we've seen in the city-state. Now, you could argue in a place like Singapore where 98% of the population is banked, and you know, depending on the numbers you look at, 10 to 15% are underbanked. One might ask, okay, what is the benefit of some of these digital banks in the industry? And I think that points to a larger question when we look at technology's value propositions. Too often within the financial industry, we get distracted by shiny objects. So I recall back in 2015 was the first year that we went to Sibos, and blockchain had been one of the terms that was bandied about and was starting to get a lot of traction. And there were a lot of companies and banks and other players in the market that were focused on using blockchain within the financial industry. We didn't know exactly what it was going to be used for, but it was kind of putting the technology before the cart, and the cart before the horse analogy. And I think that's one of the things that we need to pay attention to when we're looking at any technology or any new business model within the financial industry is what is the actual application of this? You know, blockchain is a very interesting technology, but you know, is it a solution to a problem that doesn't exist? What are we actually getting better at by using some of these technologies? AI is slightly different insofar that AI kind of replaces a lot of the human thinking that's involved in processes, whether that be on the back end or on the front end in terms of operational activities or front office activities. So the applications are a little bit wider and in my mind, a little bit more kind of legitimate within the marketplace. And we're seeing that the usage of AI, certainly in multiple different areas within the traditional financial industry and banking, as well as payments, capital markets, and insurance as we go forward. And what's really interesting to me is how some of these new players will be using this technology to create new value propositions in the market. I mean, just using the context here in Singapore, Capron Asia is a Singapore company with a subsidiary in Shanghai. We are a small, medium enterprise, but our bank treats us as that. You know, I had some challenges with our corporate bank account, and I gave them a call a couple of weeks ago, and they said, well, you should talk to your relationship manager. And I said, who is my relationship manager? I actually think my relationship manager is a computer that's sitting somewhere near Changi Airport that I have no chance of talking to. And I think that's really the opportunity in a lot of these heavily banked markets is how can these new business models create value for segments of the market that were traditionally underrepresented? You know, although we have a traditional banking relationship, we also use TransferWise. And to give you an idea, you know, we get paid in US dollars and our expenses are in Singapore dollars. So if we log on to our traditional bank account, we can see both accounts on the screen when we log on to our online banking. But it is cheaper when we get paid in US dollars for me to take that money, wire it in US dollars to TransferWise, convert it into Singapore dollars and bring it back to our bank account than it is simply for me to log on to our bank and move the money between the two accounts, which is kind of ridiculous when you think about you know, what banking services should provide. So in heavily banked markets, we're really interested in seeing what some of these technologies like AI will bring to the market, especially as we have these digital banks coming online. One final comment is on the other markets in Southeast Asia and Asia in general. I mean, I spent 14 years in China, so I've seen how Alipay and WeChat Pay and WeBank and MyBank completely changed the value proposition for hundreds of millions, if not billions, of individuals and businesses in that country. We're seeing similar changes in India, which is also with Aadhaar, the India Stack, and UPI, providing the basis for a lot of change and disruption in the traditional financial industry to the benefit of retail and SMEs. And then certainly when we look around Southeast Asia, many of the markets like Indonesia, Philippines, Vietnam, Thailand are underserved for many different reasons. In some cases, it's infrastructure. When you look at the Philippines or Indonesia, I mean, thousands of islands across the two countries, some that just don't have the infrastructure in place to be able to support a branch network, which means that many individuals and businesses are left out of the traditional financial ecosystem. So there's a huge opportunity both in these developed markets like Singapore and the underdeveloped markets like the rest of Southeast Asia for these platforms and technologies to develop. So with that, I'll hand it back over, and hopefully some of these points are things that we'll go through during our discussion today.
Very good. Thanks, Zenon. Before we move on to the next speaker, Mark, right? You know, in a very short space of time, you've actually put together a very succinct argument and observation about the dynamics of the banking sector, where from lowering of costs, now you're going towards a revenue maximization. You talk about underbanked, underserved segments of the market. And interestingly, you split yourself into two perspectives, one as a subject matter expert, a technologist, and the other one as a bank customer. So in that regard, I just have a quick question for you, Zenon. Do you think that banks struggle to find the balance in terms of the ROI when pursuing the underserved, underbanked market versus customer experience? Just a quick remark from you on that one, and we'll go through the round and hit you back with this question.
Yeah.
What I'm trying to say is, do banks struggle with finding that perfect ROI equation when they try to serve the underbanked, underserved market, as you mentioned earlier on, in the pursuit of what you call value, providing value to customers?
No, that's a great point. And I'll just give a quick case study from China. So in China, for a traditional bank to lend money to an individual or an SME, the cost is about $250 and it takes about 30 days to do that. Now, if you're borrowing for a house or to buy a car, you know, a high value secured loan, that might be cost effective for the bank. That might be a profitable loan. But if you're borrowing $1,000 to meet short-term cash flow needs, either as an individual or an SME, is very challenging. And that's where the fintechs have come in. For Alipay and the Ant Group ecosystem, it costs less than 20 US cents to originate a loan. and it takes 3 minutes or less to actually apply, receive a decision, and distribute that loan. So I wouldn't even think about it in terms of ROI. I just think some of these customers are just too costly. That's not even talking about credit scoring and the other challenges around lending. So I think it's something certainly that the banks have been challenged in. And we may touch on this later, but in China, we're starting to see cooperation between the fintechs and the financial institutions around that as well.
Thank you, Zenon. Moving on to Mark. Zenon actually mentioned something about credit scoring. So it's a very natural progression to your side, right? But perhaps you could introduce yourself a little bit, what Centrix does, and perhaps what's your perspective overview of the banking sector faced by New Zealand banks?
Yeah, sure. Thanks, Nazri. And welcome, everybody. Zeno, was interesting hearing you talk about shiny toys, and I think that's one of the challenges that banks have. Once you get hold of a new toy, what to do with it, what's the business case? So look, I run a credit bureau in New Zealand, so we service the tier 1 banking sector primarily, and obviously that's it's evolving in terms of its strategies. When I was speaking to one of the senior risk managers at a tier 1 bank in New Zealand recently, I said, look, we're moving into being able to provide services in AI. And he said to me that actually, I don't want you to give me something new, fandangled, shiny. What I do want is for you to make something better, faster, and more efficient that I already do. And I think that's important that we focus in on those business cases. What actually are we trying to solve here? And sure, things can evolve, but we need to move forward, and you need to know where are we going to get started. So obviously the banks, they're going to worry about fintechs, and specifically fintechs that can solve customer pain points. And where the banks are getting disrupted at the moment is the fintechs coming in and saying, I can show you, Mr. Consumer or Mrs. Consumer, how to pay first, which card to pay, when to pay, and how much to pay. And you really see some of our banks doing that. They're really still more in the traditional banking sector. So COVID-19 has seen a lot of us as consumers interacting more digitally with our banks. And I think that's something that's important. That means that the banks do have a captive audience that are engaged with them in a more digital fashion. And so it's going to be interesting how the banks change their processes and behavior so they can present better products and services to meet consumer pain points. So if you look at even that digital ecosystem that's available in the market now, really where they're combining services to consumers. So you can have messaging apps that might enable you to order food, to play games, order a taxi, and oh, by the way, you can also pay this bill. And you can see that, obviously for banks to compete, that is something that they need to provide and think outside just traditional banking services to compete with consumers. So I think one of the difficulties that banks, particularly that I deal with in the New Zealand market, are saying, well, what's the business case for this thing, for AI, and how do we present that to board level? And I think sometimes it might be about almost a negative business case. In other words, well, what if we did nothing? Where does that leave us? Do we die? So, yeah, and you've almost got to get started on what we call low-hanging fruit, but the easier projects to service the consumers. And obviously things can expand there into customer acquisition and monitoring and retention and collections and so forth. But in my opinion, really customer acquisition and credit decisions, and maybe that's because it's my ilk and that's where I make my money, I guess. But I think that's the low-hanging fruit for the banks, simply because if you're doing a new decisioning model, then you can prove the business case with data. It either works better than your traditional model or it doesn't. And I think sometimes with these things, it's just about getting started. So I think that's where I'll leave it at the moment, Nazri.
Thank you, Mark. Moving on to Georgia IT Kukova, maybe you could see how information business is currently impacting the banks in Central Asia, and in particular, whether the information has become so commoditized or the banks need more information than just the general business information these days. And what are the challenges, what are the opportunities you see faced by the banks in your region?
Well, Georgia and this part of the world is still underdeveloped in terms of access to finance. We don't have developed stock exchanges. We have still low competition among banks, so they can allow to charge big margins and have high interest rates. And eventually we will see developments once we have more competition. At this stage, it's not the case. We developed first credit bureau in 2005. Four largest banks became shareholders, and this company is still there. There is no new credit bureau. I would like to make a case for artificial intelligence in banking, and how it will impact the banking environment, competition in the future. As I'm an entrepreneur, I see huge potential, and let me share my screen. As I will be talking about the two boring subjects, banking and IT. My presentation will also look gray and dull. Apologies for that. So, can you see my screen?
Yes, we can. Looks good.
Great.
Looks futuristic.
So, what are the challenges for banks? And these
Hi,
are
Mr.
the
IT. Can you
challenges.
full screen your slide, please?
It doesn't work for some reason, maybe.
In that case, I will help you to flash your deck.
Yeah, yes, please.
Okay. Okay, I've given you a remote control. You may hover your mouse over to the screen and try to control.
Okay, great. So there are. Is the screen changing?
Perhaps admin can take control of the deck and just help
Yes.
IT navigate.
Next slide, please. So I will talk about the case of as an entrepreneur. We established more than 50 companies. First one was a credit bureau with the banks, as I mentioned, which is still a dominant player on the market and only credit bureau. Accordingly, we see opportunity for AI in banking, especially I will make a case for a front office relationship manager, as Zenon mentioned. What can be done? Next slide, please. What can be done for the banks to develop AI, decrease costs, increase efficiency, increase customer satisfaction? Let's imagine a bank with 50,000 relationship managers who has over millions of clients. These relationship managers need, salaries, bonuses, recognition. AI is only one; it doesn't need anything. Just needs some data storage, maintenance. Relationship managers need trainings, conferences. They go on vacations. There is a competition. There is a risk that competition can lure your employee and you lose years of training and may lose some of the know-how as well. There are some other risks. People move, they relocate to different departments, to different cities, to different countries. They just work 40 hours a week. Out of 12 months, they go 1 month on vacation. 1 month is lost due to training, conferences. AI works 24/7 all year, and you can train AI, upgrade, while AI will be still serving millions of clients. So it's very efficient, as you may agree. Relationship managers can only serve one person at a time, and every time they need to consult with the boss or the colleague, they need to put client on hold, and client is impatient, of course, when you have competition. AI can serve millions of clients same time. Relationship managers have personal life, have problems, are emotional, are getting sick, and AI doesn't have all that. So relationship managers usually have a bachelor degree, a couple of years of experience, and some basic knowledge about bank itself, just more about the products. When AI can have all this knowledge about its own bank as well as about the competition. So we see that if we look at AI to relationship managers, AI can replace at least 50,000 relationship managers in the bank, and it's of course very costly to retain all these people. And I think we need to ask clients what they think about AI. And next slide, please. The customer feedback, customer says that there is no waiting time. The customer calls to the bank, it's immediately getting connected. Customer is never put on hold. The AI has all the answers about bank services, remembers all the client data, is personal, is very knowledgeable about the past events, and knows all the family members of the client and can customize all the services. Is emotionally strong, never gets tired, irritated, impossible to offend, very customer friendly, and AI, of course, is getting trained every day, and it's getting better and better.
I think IT is describing the perfect girlfriend and wife.
Yes,
for all of us.
exactly.
Yeah.
So that's AI. So it looks so great. What will be the costs? Of course. And let's discuss what will be the next slide, please. What will be the challenges? So next. So there will be some time needed, of course, some money, lots of data and lawyers and special staff. Let's imagine a bank with 50,000 relationship managers and supporting staff. If you pay from 50 to 60,000 plus office costs, rent, we may end up paying 100,000 per relationship manager, which is 5 billion a year. And if you invest 5 billion in AI, one-time costs, and then you invest like 100 or a couple of 100 million a year, you will end up saving 4.8 billion each coming years. So it's a definitely good case for a big banks. For small banks, it's still high-hanging fruit. So we should consider starting with the big banks. So if you ask me, what is the challenge for the banks is just implementing AI, because there is a competition. Everybody's coming, fintechs. You have social media like Facebook, who has more than 2 billion clients. If they introduce banking services, they can compete with any bank in the world. And like Bill Gates said 10, 15 years ago, banking services are needed, but banks not necessarily. So there is the only way for banks to go ahead and be competitive is to introduce AI. So that's my point. Thanks.
That's it. Thank you, IT. Absolutely worth it to develop AI. That was your parting shot for the first round. Mark, I have to jump back to you. One of the reasons why I jammed to IT, because both of you are in somewhat similar business. However, you are in two different level of maturity of markets. So looking at IT's deck so far, would such value proposition run well with the more established banks, more established banking sector in New Zealand? So you talk about evolving strategies. New Zealand banks moving towards adapting to AI. I like the fact that you mentioned that statement, right? That question: what happens if we don't adopt AI? What's the worst that can happen? Is this mindset really changing? And are they really evolving towards adopting the kind of argument that IT brought forth?
Yeah, they are, Nazari. Surprisingly, yes. So the answer a few years back, in fact, we were looking to develop a machine learning decisioning engine and presenting that to the banking sector, which they were quite excited about. But the issue that we came across was always, well, I've got to get a risk and audit sign-off, and I would never get it for that model. So you have to develop a standard model. You can't go down the AI route. You know, again, it comes down to Zenon's shiny toys type process. But recently, in fact, FICO just released a case study for ANZ Bank. They operate in Singapore as a minnow, but in New Zealand, they about 30% market share. And they've done exactly that, developed a machine learning decisioning model. And again, they did it as a champion challenger event with their traditional models, and went right through the process. Now, they haven't put that into production, but what they have done is gone through the whole learning experience and say, could we, would we, assuming we get our approvals, actually go down that route? And they have, in fact, proven an uplift using a machine learning model over traditional model builds.
And what's the desired outcome from the credit scoring? What are they going to predict? I mean, the ability to predict default is pretty much there. So what else do they want to squeeze out of AI, so to speak?
Well, at this point, it's really about, can actually we make a better prediction of default, and exactly that. So you're not trying to really create something radical and new. You're just going to say, can I create a machine learning model that actually gives me a better prediction of risk? Is the Gini going to be higher? And at this point, on same data sets, they're saying the answer looks to be yes.
And this is the kind of need that New Zealand banks are looking for, the ability to predict better the rate of defaults and all that. But considering the New Zealand banks NPLs are very, very low in the region, in the world, I might add, would this be a major pain point for them, you think? And Zenon, you can come in anytime before we bring in Charles, yeah?
Well, I think it's about, again, it comes down to starting somewhere, right? So where are you going to start? Let's take something we traditionally do and see if we can do it more efficiently and better. And it's simply that.
Okay, so it's about the issue of efficiency and maintaining the leadership position that they are in. Zenon, what's your comment about Singapore banks or banks that you've dealt with in the region, especially in China, where it's a bit different, right? The NPLs there are much higher and it's so sensitive. I mean, we've seen one tycoon said the wrong thing and derail their IPO plans when commenting about the risk levels of banks. So I hope it doesn't happen to you too. But essentially, New Zealand's NPLs are fairly low, right? One of the lowest in the region. But China's NPLs are much higher. Would such ability to predict risk more sharply, accurately, and more timely would be a better thing? And will there be any moral hazard or agency costs from preventing that technology from taking place in China, for example?
Yeah, of course. I think those are good points. I mean, Ant Group's numbers on NPLs on their MyBank platform are very low, less than about 0.1%. So if I mean, those are the self-published numbers, nobody's audited those, but you know, it becomes clear that when you have these sources of alternative data, especially in a hyper connected environment like China, where everybody's on their smartphone and doing things within those ecosystems that we talked about a little bit earlier in the presentation, it gives you a really good idea of the credit worthiness of that individual. I mean, me, after having lived in China for 14 years, you know, Alipay arguably knew me much better than my bank did, more than any bank did. I mean, just to give you an example, I received a letter a year and a half ago from Citibank, and they said, "We realize you're no longer an employee of the bank." And I had left the bank 15 years before that. And they were cutting off basically my employee account privileges 15 years after I left the bank. And if a bank can't understand its own employees that well, how are they going to understand their customers that well? And so I think that's really going to be where the challenge is for a lot of these, as these markets start to digitize and we start to see more competitors, is, you know, if these platforms like Alipay and WeChat Pay understand the consumer much better than a traditional bank can, how can you have those low NPLs? How can you originate a loan for less than $1 and in 3 minutes? It's just impossible to do. So the only choice for many of those institutions is to cooperate, because, you know, when you have the legacy technology and the legacy organizational situation that so many of the traditional banks have, it becomes impossible to pivot that quickly. And so, you know, they're left with either the scraps or, you know, they need to cooperate to be successful.
IT, Mark actually brought up the issue of credit default, NPLs, ability to predict risks in a timely and more accurate manner, supported by Zenon, right? With the COVID situation in Georgia, with the COVID situations in the rest of the world, in your area, do you see NPL buildups happening in the banking sector? And would AI play an important part in detecting risk sharper, more accurately, in a more timely basis? And can you explain how this would pan out? Would this kind of value proposition appeal to the banks? So later on, we will talk about front office, mid office, and back office, right? But since Mark brought up the issue of credit default, ability to predict credit risk, you know, together with Zenon, we want to know more about that before we bring in Charles to speak about the whole value chain of banking. Over to you, IT.
Yes. Yeah. First, due to pandemic, everywhere in the world, we see people losing jobs, companies losing people. Businesses are getting worse. Companies are getting bankrupt, and it will definitely impact on NPLs. But if we look at the banks using just credit bureau scores and their own models, of course, it's not enough. You need, you need additional data like industry data, business information companies, all the analytics, which should be included and integrated into AI, which will monitor even new regulations impact on some of the industries which credit bureaus don't do, or oil prices or currency exchange rates hitting some of the companies, you know, import companies, export companies, or currency, especially in Georgia now, when currency devaluation is hitting consumers who are paying bank loans denominated in dollars or euros. And AI can do all of this because it will include all of the data, everything. So that's why I think it's the best way forward, and there is no alternative.
Sorry, I was muting my headset. So it's about continual monitoring with real-time data that can strengthen your risk profile of a particular customer. Pretty similarly echoed by Mark Rowley. Now let's move on quickly to Charles. upon hearing your fellow panelists, right, I believe you have a set of deck to share. And how would that sharing of yours be congruent or divergent to what the other panelists are saying? Over to you, Charles.
Thank you, Nasri. Can I share my screen?
Yes, you can
Yeah.
share.
Okay. Okay. Can you see the screen?
Yep.
Yeah, I saw the screen. Yes, thank you for all the sharing from Mark and from IT. I think we speak the same sentiment. The banking has changed, and we have to change. If we don't change, the market will change the banking. And the key to banking is all about technology. If there's no technology, there's no bank. Okay, you must have technology, then you have bank. So bank is enabled by technology, and the way to increase market share, the way to increase profitability is to reduce costs, and cost reduction, it matters a lot. We used to pay about $1,000 just to acquire a new customer. $1,000 is a big amount of money. And just now Mark was saying that to do one transaction it cost the bank $250. And when we were doing SWIFT, I was trained in the SWIFT room. One in single transaction in SWIFT in cash management, the MT3 and MT4, it cost the bank like as much as $20 just for one transaction. There's the technology cost without even adding in the fully loaded cost of the data center and the back end cost. So that is how expensive banking is. Everybody's role in the bank is to reduce it. I remember those days in the financial crisis in 2006 when I first joined Citibank, 2005 when I first joined Citibank. When all other regions are having issue in terms of profit, in terms of market share, we are here in Asia. We became the biggest performer in Citibank because we contribute 25% of the gross profit margin. We contribute 33% of the global revenue or the income. And I did understood that when I was doing my job. I thought it's normal for me to work around the clock. And I support 3 shifts from morning is Asia, afternoon is London, and 9 p.m. is New York. And because of this, we did very well. And when Europe wasn't doing well, US wasn't doing well. And I didn't see the impact until the day I left. In December 2010, I left Citibank. And after I left the bank, my colleague came to me, said, Charles, I don't know what you have done when you are in Citibank, but they actually hired 6 people to replace your job. I said, oh my God, I was doing 6 persons' job. And today, you don't need to have so many people doing the same job. You just need automation, fully automate. And I can understand a lot of bankers, they know the problem, yet they just claim that they don't know the problem. They know the problem, they don't want to fix it, because if it's not broken, don't fix it. Because the minute you fix it, they will lose the job. And a lot of systems, software that I have brought into the bank, every time when I bring in a new system to the bank, people would be so insecure and will be so nervous that software is going to take over their job. Similarly, today in artificial intelligence, it's not that they don't, the bankers doesn't know the benefit of artificial intelligence. They know it's about sooner or later they have to do it, but they're just trying to delay and delay. So hoping that something will happen, because the fear of losing the job is always there. And I know very well that I've seen too many times that whenever we have a new system that lost the job, okay, fine, there's always some casualty. But there are people also who just take this opportunity to ask the bank to give them an opportunity to learn, to be part of the new technology that the bank is implementing. And these are the survivors. The dinosaurs are those old school people who's about to retire. They are the ones who resist technology. So what I'm going to share with you is, like, if you look at the mega trend, the mega trend tells you the numbers. The numbers doesn't lie. I mean, people know that a lot of money is being invested in fintech, because basically banks are driven by fintech. And the number of fintech created by the market is faster than the way that the bank increase the branch and also the outlets, the retail outlets. I know it very well. Those days before we have fintech, before we have very powerful internet technology, and Citibank used to be one of the most successful banks that no other bank can follow for one reason, because Citibank is very clever in doing a pivot and very creative in creating market share. Remember those days in Malaysia when they only have one branch, and Malaysia always restrict a foreign bank from expanding their business activities. So Citibank found an idea that they can do phone banking. Because of phone banking, they have increased the footprint of customer base, become the largest credit card issuer in Malaysia, because when the government said they are not allowed to have additional ATM machines, they are not allowed to have additional branches, but the government never said that you are not allowed to have phone banking. And Citibank make full use of the phone banking facility and become the largest credit card issuer in Malaysia. Similarly, in India, India being such a huge country, and they are also very restricted by the way that by the number of branches that they can operate. And what the Citibank was doing was under the City Financial, they provide loans to small, medium enterprise and also microfinancing to small traders. And the typical loan that they give up is like $3,000 US, maximum up to $5,000 US. But because of this, the margin is so low, and Citibank thought, well, we have to operate in the lowest cost. So what they did was they give a laptop to all the Citi bankers, and they just rent a table space, a small kiosk, the size of a table, and they call that a branch. And because of this, Citibank has like 15,000 branches all over India, and they call it branch. Is actually a kiosk with one table and one laptop. So the point that I'm trying to say is that technology is really the great enabler. And you look at this chart at the bottom, the blockchain is coming in very strong that replace the banking system, because blockchain today is one of the most secure technology, because it is the most trusted technology because of security, and that leads to the three major trends of the banking future. I mean, the number one criteria is new technology. You must embrace new technology. Number two, artificial intelligence is the way to go. I have personally seen artificial intelligence in practice, in action, and there's no two way about it. Either you move with AI or you don't. If you don't move with AI, your banking business is gone. And that's the mantra. And today, digital ecosystem, the cloud ecosystem, is so powerful and so cost effective that if the bank doesn't go into this, very soon they will close down, they will close shop, because the biggest fear that the bank has is when you put everything on the cloud, there's a risk. And today the risks are being mitigated because the cloud ecosystem is so secure that putting anything on cloud doesn't compromise your security and your data privacy as required by most central banks. And today, there's such thing called personal cloud, a private cloud, and all this can be done in the most cost-effective way. I remember when we were building a data center in China, in Shanghai, those more than 15 years ago. It cost the bank almost $30 million US just to build a 2,000 square feet small data center. When for the same amount of money, we could have built 5 data centers in India. And why is that so? Because the banks are having too many people from the high cost location trying to build a data center in a high cost place like Shanghai. And they used to send like 20 people every week flying off to Shanghai just to build the data center, when we could have done it easily for 1/5 of the price in India. But unfortunately, those days, the regulators and the bankers doesn't want to take that kind of risk, because that will be a career limitation move for all the bankers. So the point is, They know it, but yet they don't want to do it because of personal protectionism and personal interest. And then you look at the next generation architecture for the future bank. Everything here that you see on this slide, it talks about being nimble, adopting the latest technology. In the past, the banks, when you ask them to be connected to the banking system, it will take them years before they can agree to it. But today, this has to be done. And one example is the bank is so backward. I was talking to one bank and I wanted to ask the bank to allow me to have my banking transaction information to be integrated with my ERP and accounting system. And I have sent in a digital form and thought that they can accept it because I've sent the email to them by my official work email, which they know who I am. And they came back and said, excuse me, sir, the electronic signature sign in PDF is not allowed. You have to come to the bank, or you can print out a copy of this form and sign it physically in a hard copy and send it to us. And it will take us 2 weeks to process this. And this is how inefficient a bank is, even though Singapore is one of the most advanced banking operation in the region. But there are people who still be so backwards because of their own personal reason or specific reason. And this slides talk about deployment, talks about building capabilities. Yes, all these people know that robotic helps you. Like just now, the earlier speaker says, yes, AI is 24/7. So ask for leave, they don't ask for bonus. So AI is the way to go. And banking on things in the next, looking at this, you look at China. China, everybody knows that they have done things so differently using AI. They have done it 5 years ago, and now we are start to catch up. And when I talk to the people in China, they say, yes, we have done this 5 years ago, and you are now doing this. You're way behind us. True, and this slide will tell us we got to do something. And how can banks leverage on AI? Almost every aspect of the banking operations can use AI. It's just a matter of implementation. Implementation is key. The Chinese always tells me, you can tell me the best plan in the world. You can tell me the best technology in the world. But do you have the capability to implement? Do you have the ability to execute? So the key is execution. Whereas China has the ability to execute, when the rest of the market around the world may not have the ability to execute because of their political system. That could be one. That is one of the reasons. The political system in China, when the boss says do, everybody will do. Nobody will challenge the boss. But in some economies, people will challenge the boss because they believe in consensus opinion of everybody. So that may be one of the cultural things that put China apart from the rest of it. I mean, Mark, you have lived in China, you know very well how they behave. And where are the banks as of now? And the banks know that they have a lot of legacy system in them. And for them to build something from scratch, it takes them years. And I knew it very well when I was in the bank and we asked ourselves, if we need to have a new technology, how much time do we need to build a new system, a new technology that is ready for commercial rollout? We did a survey. It takes us about 2 years to 3 years. Then we asked ourselves, can we go to the market to buy it or to leverage on other people's technology, or we can do a white label? Yes, the answer is yes. And we have done it. And we go to people who have done it and we white label the product and the solution with them. And this is what you see in these slides, that a lot of banks are moving into a small solution provider that appears to be a competitor to the bank. So if you can't beat them, you join them, and you join them and you join force with them, and you become more powerful. And same goes to the wealth management people. They started to use robo-advisor for the longest time. and McKinsey says that you can end up managing more than 13 trillion worth of asset by 2010 if robot advisor is widely used. And look at the AI startup fintech. You see, every day we see a lot of startup. Why is there a startup? It's because the market knows there is a need. Even though the bank keeps saying that they are sufficient, they serve the customer well. The fact is, in many areas, the banks are not serving the customer very well. And that's why the small players are coming in bit by bit. I always remember this quote by the senior vice president, or now the president of Tencent, Mr. S.Y. Lau Xingyi. He was telling the Islamic bankers 3 years ago in Malaysia, if you don't change, the market will change you. If you don't change, you will die by 1,000 cuts without you knowing it. So this slide tells you this. There are many players in the market. And this is another slide that talks about almost every aspect in the bank. There are people coming in very fiercely on a day-to-day basis. And of course, we always talk about banking as a service. So we have done banking as a service. We go to some smaller economy where don't have the capability. We actually export our capability in a box. We call that those days bank in a box. Today we call it banking as a service. And this used to be something that most banks are very afraid of, because when you provide banking as a service, you will likely to be exposed to counterparty risk. But today, technology is such that this counterparty risk is mitigated. And with that, I hope that you can get a very good glimpse of what I went through. And thank you for giving me this opportunity to share with you my personal experience and my view about the industry. Thank you.
Thank you so much, Charles, for the very insightful presentation that captures the dots in the banking system, the value chain, the relationship with startup systems, and so on. So let's get to this exciting part of the panel discussion, where we're gonna seek the panelists' subject matter opinion on the future of banking, right? So we've spoken about the past, we've spoken about the crisis, we've spoken about the current situation and the dynamics that are facing, but let us put on our telescope, right? Put on our future lenses and see how the banks need to prepare themselves for the future. And to do that systematically and efficiently, I would like admin to flash a particular diagram that highlights the front office, mid office, and back office functions typical of a bank. It's not exhaustive, but essentially it would certainly list out certain areas that each panelist may think that these are the kind of things that they need most. Okay, so you look at the front, mid, and back office. If you were to pick up three types of technology or the purpose that it serves, right? Beyond the shiny toys. Okay, of course, we will put real-time analytics, predictive machine learning, etc. Put aside the technical jargons, right? But just by looking at this diagram split into three components, which of the top three areas do you think are most needed by the banking system? And of course, with some caveat in between, whereby you will state whether they are more developed banks or whether they are more developing banks or whether they're tier 1 or tier 3 banks, yeah? So perhaps you can differentiate for that, because IT mentioned about big size banks, you know, having the bigger budget, and the smaller size banks have lesser budget. So to be fair in your assessment and your recommendation, perhaps you can separate the top tier banks against the mid tier to smaller tier banks. Who would like to go first? Pick up three areas of technology that you think are most needed by banks, and why do you think that's the case for the future? So post-COVID, you see in 2021, 22, 23, if they have a budget to spend, what would you recommend to them and why? Maybe Zainan, you'd like to start first?
Sure. Happy to start off on that.
Okay.
Yeah, I mean, these are quite interesting. Another case study that we have from China was, I was giving a talk on fintech in China and fintech in Asia in general about a year ago in Shanghai. And there was a girl who raised her hand at the end of the session, and she said, look, I have a question. I was using Taobao, which is one of the large e-commerce platforms in China. She said, when I was checking out, I needed, they offered me 10,000 renminbi in credit, so the equivalent of, say, 1,500 US dollars. And she said, why did they do that? And I said, well, did you use it? And she said, yeah, I used it. And I said, well, what did you do with it? And she says, well, I bought a bag off the platform with using that credit. And I said, well, that's why they gave it to you. Much like when Steve Jobs gave us the iPhone, we didn't know that we needed the iPhone until he gave it to us. And that idea of kind of predictive analytics. So when we look at the screen, things around customer targeting, customer analytics, feeding into the different products and services you can offer is something that we look at and essentially view as a holistic approach to predictive finance. And so this is the idea of situational finance, where your provider, in many cases, knows better than you what you're looking for. Now, in the case of this woman who asked the question, she was, late 20s, solidly kind of middle class Chinese national who was working at one of the consulting firms, so one of the EYs or KPMGs. She didn't really need the 1,500 US dollars in credit. She could have easily afforded that on her salary on her own. But because the platform predicted that based on her shopping habits, based on her interests, based on her credit history, she's probably going to be a good borrower. And if we offer her the money, she'll probably take it. And indeed she did. And I really think that element of situational finance for both, again, going back to what I was saying at the very beginning, for the financially included as well as the financially excluded is really important. So that ties into a couple of things here, but I think around the customer analytics and servicing, tying into some of the products that you can offer, and then measuring credit on the back end of that, I think are all really interesting things and will really define the future of banking as we go forward.
So you would pick up the one that does the credit risk profiling in the front end, and then that leads to the back end side of things?
Well, I would say, starting from the left, the customer targeting and customer analytics. You need to understand
customer targeting. Oh, okay. So you mentioned about the risk aspects of it. So does it mean that you target the marketing vertical that then connects to the mid or back office?
Yeah, I think, again, not getting too technical on these things, I think it's very difficult to dive into one of these topics and not have it tied into many others along this value chain. When you using that case study as an example, there's a customer targeting and customer analytics on the front end, right? So to identify the person. And then the lending, is the product or service that we're looking at and the sales relationship. And then on the back of that is, the risk-based pricing policy. If you just look at that case study in particular, those three areas really stand out and are all areas where today for Ant Financial, or Ant Group rather, AI plays a critical role, because we didn't talk about it before, but in that 3 minutes that my bank takes to make a loan, it runs on what Jack Ma has called the 3-1-0 model, which means 3 minutes to apply for a loan and to get a decision on that loan, 1 second for the loan to be dispersed to the account, and 0 people involved in that transaction.
Wow.
And that's the only way that you can get the cost that low, down to cents on every loan. And that's one of the key ways that it's been effective and has been able to address that market that's just too costly for traditional banks to address.
Yes, thank you very much for that, Zenon. I think you relate to more of the origination stage of the value chain of banking. So the faster you process, the faster you identify the right customers with the right risk profile, the faster you convert them, the faster you originate or onboard them, the higher the margin will be and the lower the operating cost will be, because of the lesser reliance on labor, so to speak. Yeah. So that will be your observation or your recommendation of what banks need to do. How about you, Mark? What would be your top 3 choices? I know it's very easy to say all or just zoom into one, but if you to have a cluster of such technology by referring to this simple framework, where do you think banks need most in the in the banking sector that you're in?
Well, I think Zenon might be reading my notes, to be honest. And I think exactly was one of the other panelists. But look, bang for buck, you have to look at the digital onboarding, right, and transaction analysis. There's no question. And to make that work, you need the credit risk component coming into play. There's one more I'd add though to that, perhaps the third, because it's sinking the banks in terms of costs, and that's compliance solutions. So I really think if we start using AI technology to solve some of these compliance obligations, that is also going to give a significant return to the banks.
Okay, that would be more on the fraud monitoring, the compliance, right? Which is more of a mid and back office. How about you, IT?
Well, I agree with all of the above said, but as I mentioned, frontline AI will be the toughest because mid office and back office is already doing a little bit of AI because there's a lot of data gathered. There is a lot of scoring and analyzing. It's already underway, but talking to client, conversing with the client, persuading it to sign agreement, and if it's done by AI, it will be, of course, a much harder task. So it will be eventually done on a later stage.
Right. So how about you, Charles?
Yes, for me, my three choice will be customer engagement. The first, there's a lot we can do in customer engagement using AI analytics to acquire customers and also to understand the client's buying behavior using AI. And with that, we are able to increase and also build our transactional services volume higher. And banking is all about volume. When you have volume, you have revenue. When you have no volume, there's no revenue. So I find that the transactional services are very important. The more that you can process, the more income that you generate for the bank. Okay, and that comes in together with number three. Number three is channel management. And channel management, there are so many people that the bank can work with channels. Channels are the people who can build your team up, your customer base, because your channel is already engaging the customers. And when you do a channel very well using analytics, yes, the bank is doing channel all the time, all these years, but are they effective? The question is, the problem is they are not as effective because not every bank will take care of the channel very well compared to another bank. And that makes a difference between a successful bank and a not so successful bank. A bank who's very competitive will go to the market and do everything with the channel because they know that channel will bring them a lot of captive audience or captive customer. The bank can work with the insurance company. The bank can work with this retail outlets and do more cross-sell and upsell. So channel management, to me, that is very important. And I have seen how effective channel management is when you do this very well. Your customer base will be increased, your revenue will be increased, your bottom line will be increased because your channel actually take up half the operating cost on your behalf.
Very good, Charles, and everyone else. Now, I'm going to ask you a very potentially controversial question. We have about 20 minutes to go, right? Just a sense of time. What's the controversy all about? Okay, you have identified your 2 or 3 technologies that you think the banks of the future need them. And now the next question is the people factor. Let's talk about the people factor within the bank. Between the CEO, the CTO, the chairman of the technology committee or risk audit committee in the board of directors, how do you think such ideas that you put up, such recommendations that you put up would differ from each stakeholder from the rest? I'm asking a very general question by virtue of a faceless, genderless, right? And assuming they don't have any form of personality attached to it, right? But by virtue of the structure in a bank, right? How would you approach the futuristic, visionary, pragmatic ideas that or recommendations that you have to the 3 different types of people: the CTO, which is the technological side, right? The CEO or COO, the management, right, that runs the bank in a non-techie way, and then followed by the member of the board of directors sitting in one of the committees. Anyone wants to come in at this point in time?
Yes, I can take this. I think this is what I've been doing all these years. And
Okay,
whenever I implement a new technology, I want to introduce a new technology. The business unit manager will always be the one who come to me and say that they have a new technology that they want to implement. And I became the person who go and lobby. The first person that I lobby is the CEO. The business manager would have discussion with the CEO. When I go to the CEO, I will always go to the CEO in just one-page document, and my pitch is 3-minute speech. I go to him, I stand in front of him, 3 minutes, I must convince him what this technology can do for him. Otherwise, he'll say, please come back again, you're out. And I will prepare 1-page document just to share with him. In 5 minutes, he must buy in. If he don't understand what I'm talking about, I fail. And that is what I usually do. And once we go past the CEO level, and the CEO will ramp up the COO, the Chief Operating Officer, the CTO, and these two people will buy in. Once these two guys buy in, we form a committee. We form a committee or a project team. And this project team will definitely report back to the board of directors, and eventually the chairman will know about this. And that will be the time the chairman will provide his support to buy in the initiative. And once that is done, and the working level, which is the Chief Operating Officer, will organize the technology team to build the project together and to execute the project.
Thank you, Charles, for a rundown of the processes. And so it's all about convincing with the value proposition with your 2-3 ideas, right? And giving them in 1-page document would differ from some other banks, right? They would expect more detailed explanation or cost benefit, but not in your case. They just wanted something brief, something short, with lesser details, you know, to the CEO. Where I'm coming from also, in addition to what Charles said, was the kind of reaction that each authority or each personnel carries based on the virtue of the work that they do. So Charles shared with us, based on his actual experience internally within the bank, when he was an employee, a senior employee, senior executive of the bank, responsible for bringing technology. How about the rest of you who sees, you know, each of the member of the banking of the bank, each personnel, bank personnel, how would they react in terms of the expectations, in terms of their level of details, in terms of their you know, sophistication in towards understanding AI in general? Anyone? Between yeah, that's right.
Come in on
yes,
that.
Mark.
I'm not sure that it changes whether we're talking about AI or anything traditional. You know, the CTO, the focus area is essentially on the new tech and how easy is it to implement. The CEO is going to focus on value and what's my return, and the board's going to know what's my risk and what's the risk mitigation strategy. So the reality is that whilst they'll all get the same pack, they'll all focus on different aspects, and you've got to emphasize those specific aspects to those three areas.
So how do you harmonize them together? Where I'm coming from is, if you are the AI advocator from the outside, and you have these 3 groups of people with 3 different focus and functions, as you rightly put, right? They look at different level, depth, and returns. But how do you convince them on those 2-3 areas that you highlighted, that this will shape their future? I mean, it's a very fairly general answer, but a question. But I'm just curious, how would you approach from a, let's say, credit risk origination, predicting with you know, more certainty and more clarity, more accuracy, and how would this differ from one level to another? Happy to hear your thoughts on that.
I think the CTO would be the easiest to persuade, because
really, you think the CTO would be the easiest?
Definitely, because he would love to have more budget for IT department. and he will be happy to get more resources, more attention, and of course, if everything works well, he will the role of IT will increase in the bank, as famous dictator Stalin used to say, less people, less problems. So,
Okay.
so HR would be relieved eventually if they have less people and you have more money coming and less costs each year. So, and CEO would be the most difficult to pursue it, because for the chairman, chairman would say, here is executive, and you should ask him, and maybe he makes a case if it makes sense or not. So an executive has, a CEO has a lot of things to do, and he will try to avoid and delay and postpone all these things, because there are so many priorities in front of him. So CTO, chairman, and then CEO. This is my...
Wow, very interesting. How about Zenon? Your thoughts?
Yeah, it's an interesting question, but I think to put this kind of bluntly, I mean, I think it's a bit misguided, because if you're thinking about a solution that's based on AI or any kind of solution, I mean, you should have the data in front of you to be able to present to any of the groups that we've been talking about. So if you're having a conversation with the CTO, you know, things around how this fits into the existing infrastructure, how this is going to impact the budget, those are going to be critical questions. If you're talking to a CEO or a head of the business, his questions are going to be more around, okay, what does this mean for our revenue and our cost for a business unit? So in my mind, you know, and in the work that we do, indeed, you know, when we do a research project or a consulting project, inevitably we're presenting to multiple different segments of the bank, or multiple different stakeholders within the bank, or any of the companies that we're working with. So, you know, in the research and the business proposition that you're taking to the stakeholders, you should be ready for any of those questions, because as we've talked about before, it's not just a technology question. It's not just a business question. This is fintech. You know, this is how this is coming together to fundamentally change the way we do business. So I think really the answer is you should be ready with the value proposition to speak to any of the key stakeholders, whether they be on the technology side or the line of business.
Yeah, thank you for that. I think there's a layer of dimension into this question where internally we are curious, based on your experience with dealing with the banks, who drives innovation within the bank, who drives the AI adoption? Perhaps I should have made my question layered with this part, because we've seen banks that can be driven by the board of directors who directed downwards, right? Instructing the C-suite to actually adopt technology. But however, there are situations where it's bottom up, like what Charles mentioned, right? Starting the business unit, then it goes up, and it goes up. So there's no right or wrong answer to this. I'm just curious about the experiences that each of you have when it comes to getting responses, as well as getting the strategic direction of AI adoption, right? So IT actually commented about a very zigzag manner. So he speaks to the technology side, then he jumps to the board, it goes down to the C-suite, the CEO. Charles looked at it from a bottom up based on his own experiences, where you have to work it out from the needs basis, right? Based on the ground up needs, then it flows up vertically up, right? And somehow Mark and yourself, Zenon, you mentioned about getting yourself ready for a customized or tailored presentation for each party, which really makes sense perfectly, right? Then the questions, the overarching question then becomes, within the bank, who should drive the innovation, the AI adoption, the transformational efforts? I know it's a team effort. I know it has to be bank-wide. Everybody must be involved. Change management has to kick in. But who should be the leader? Who should drive this measure? We're trying to prepare the banks for the future, right? We're coming out with a message that, okay, this is the current problems that you have. This is our current gaps. We're going to do something about the future. This is what the future lies. Digital bank is coming in. Everything is moving upside down. So what are we going to do about it, right? So the people factor now is being questioned, right? And who within the authority within the bank should pursue and lead this initiative. We've seen many models. Don't get me wrong. We've seen many models. We've seen banks setting up an innovation department or corporate innovation, right? We've seen business development pushing it. We've seen HR, absorbing the, what you call transformational developmental exercise within the bank. But in your opinion, persons aside, or who should drive this forward, and how effective will this be?
Okay.
Anyone would like to try?
Maybe I'll just pick it up and kind of continue from what I was saying before. Look, if there's not the buy-in from the CEO down, then true change is not going to happen within a banking organization. I would agree with you. I mean, there are many companies that have many different approaches, and somebody from CE.A.I told me at one point, it's like having a quiver of arrows to attack many different directions. So CE.A.I, has an internal incubation. They have a corporate venture fund. They have hackathons that are external focused. They have many different ways of kind of adopting fintech solutions and bringing it into the market. But any solution that has to start at the bottom and work its way up is not going to be successful in the long term. It has to be a buy-in from the top of the organization down that innovation and change is one of the key key drivers that we have. And I think one of the things we've seen over the past decade is an incredible amount of innovation theater. So, companies will set up hackathons and innovation labs, but nothing comes out of it. It's good for marketing purposes, but it doesn't actually address any of the problems. And even in banks like VBS, where innovation is high on the agenda, I would argue they haven't been completely successful in leveraging that as much as they can. So whilst they present a good case study or a good potential model, it has to be horses for courses, but that senior leadership buy-in, I mean, regardless of where you as an individual or employee of a financial institution choose to, start the conversation with the institution, without that buy-in at the top, it may be piecemeal solutions, but it won't be a holistic view of what technology and more specifically AI means for our business.
Excellent answer, Zenon. That's extremely frank and a very accurate depiction of the state of affairs. This itself can become a whole topic on its own. Anybody would like to add to what Zenon has to say? At the same time, do take a look at the open Q&A window. There are two pending questions, I think, that needs to be answered. Okay, so you can, panelists, you can choose to add on to what Zenon and IT have said. And then we can also look at the questions posted by someone about digital banks, incumbents as digital banks, how this will pan out in a new era with all the licenses that are being issued out, how this is going to shape the new way of competition. Would one have certain strong competitive advantage over the other with this digital bank, with the specific customer segments? This sort of tied back to what Zenon has to say about the underbanked, underserved, right? If this indeed digital banks could serve that, then I guess it will be a winner in that sense. But from a competitive standpoint, in terms of getting specific customer segments and innovation in banking products, how do you guys see this happening from a digital bank perspective?
I think for digital bank, they start already digitalized, and they have nothing to lose. They have to develop, and they have to put more emphasis what was their competitive advantage and market entry. So of course they have to make more emphasis, and versus traditional bank who has a lot of old models, you need to change, reshape, and it's very challenging. So it will be easier for a newcomer, especially if they are very aggressive to taking market share. And there is no way, I mean, for a newcomer not to push even harder, versus all traditional banks will be chasing and we'll try, as I think Charles correctly mentioned, to postpone this decision for some indefinite time until they see the real need to proceed.
I'd like to add on to what Nasri talked about just now. The key drivers, as what was discussed earlier, it has to be top down. If it's top down, then there's a good chance of success. And I have worked before most of the time, the key person who drives technology, from my personal experience, is the Chief Operating Officer. Of course, there are other people who comes into the picture. There may be a case that the CEO found a new technology and he wanted to implement it for the bank, or the chairman who wanted to implement a new system for the bank. They are the people who will go to the Chief Operating Officer and tell him, please look into this. And that is where the Chief Operating Officer will start to talk to the various people from the product development team in the bank and to the technology team to make it happen. And because the CEO knows that the Chief Operating Officer will be the person who will orchestrate the whole thing. And the CEO also knows that the CEO is supportive because that is an initiative from him, and together with the buy-in from the chairman. So I think that is in line with what we have discussed so far, and it always has to be top down, and bottom up is the most difficult task to do, and challenging because you won't get any buy-in if it's bottom up.
So there has to be leadership at the top that is going to drive innovation, of course, we know that. Yes. And you stress the importance of having the CEO together with Zenon, right? To be able to drive this up, down, top, down, left, and right. Yes. And I've got a question pertaining to what the audience posted, right? To the credit bureau players like Mark and IT. So when banks are being disrupted, potentially to become by digital banks that are surfacing or within themselves, right? They may create an extended financial institution that is centered towards digital banks. What would this mean for the credit bureau business like yourself, Mark, and IT? How would you be disrupted, and how would you innovate, and how would you serve this particular new development going forward? The issuance of digital banking licenses. And where does the credit scoring solutions fit into the digital bank business?
We really haven't seen credit bureaus disrupted due to open banking. So if you look at the UK, it's been in play for some 3 years now. Credit bureaus still play an important role in the assessment of risk. Although I do think that we're really moving down towards that transactional analysis and analytics over the top. So yes, of course, the data set is a critical component to a credit bureau and having full market participation. But what we're finding is that overlay of the value add is really in the analytics, and where we're moving in terms of a open banking or open data initiative is really looking at transactional analysis and feeding that into the credit score.
So you still stay true to your core business. It's about deepening the analytics, deepening the analysis, and then make it more future-centric, the ability to predict future outcomes more accurately. Yeah, very focused approach indeed. Yep. Okay, we've reached to the last 5 minutes of the session, towards the end. I would like every panelist who have graciously and intelligently shared very, very powerful points about the banking sector of the future. We would like you to have a final word on the topic, and what is the final advice that you would give to the banks, to the senior bank executives who are listening in? What sort of future holds for them, and what sort of things they must do to get themselves on board, and the things to avoid, right? So maybe a minute each also. Thank you. Who would like to start first?
Okay, I'll start first.
Okay.
Implement AI in a bite size and create small wins to have big wins.
I like the quick wins. Yeah.
Yeah. Always have quick wins to make it into a big win.
Yeah, that's the mantra for many bankers now. They need to see quick results, right? With the least amount of investment possible. Thank you, Charles. Who's next?
I'll go next. I think in 21st century, it's technology century, data is everything, not only for banks, but for any business. So banks should concentrate on developing data collection models, analysis models. They should, of course, work with venture capital funds, which they own, or cooperate with the existing ones to not to miss what's going on in the industry. They can, because only credit bureaus scoring model, you know, as I mentioned before, it's not enough, and you have to have knowledge what's going on in the market. You have to get analytical tools to predict what is the customer looking, and so I will conclude data is everything, and more data you have, better you process, faster you get, maybe not even yearly, but monthly, weekly reports, better protected you are, and you can get market share, expand.
Well said, IT. Thank you for that. Where data is a key emphasis for banks right now, and do something about it, harnessing it and creating enough tools and to be able to predict forward. Yeah. Mark, over to you before we pass on to Zenon to close off the panel.
Yeah, I think, Nazri, that, you know, we've talked about getting started and that pain point. I think it's important to note that it doesn't require a whole of bank exercise. So I think starting with something where there's a customer pain point, could AI produce a better outcome, and then doing a champion challenger exercise. I think if we start what we call the low-hanging fruit, maybe the easier tasks, and then launch your AI initiative from there. Too often, I think we see the potential for the big bang approach, and it just becomes too hard for everybody.
This is what you call think big, start small, and scale up, right? So well said, Mark. In a short manner, you managed to articulate very well what that really, you know, how to really kick off a particular project, similar to Charles, about having quick wins, have a quick result, and then before you roll it out gradually to other departments or other units. Okay, excellent. How about you, Zenon?
Yeah,
One last phrase.
And I think all of the other panelists have really stolen a lot of my potential thunder on closing this out. But I think all of those points make a lot of sense. And I think, you know, when we look at what clients are doing and how they're engaging, I think the most critical thing is we have to think about, what are we trying to solve? What is the issue that we're trying to solve? And just going back to the China example, you know, Alipay solved the issue of friction in e-commerce. And then on top of that, they democratized wealth management. On top of that, they provided credit scoring and lending. And it started off, there's no fancy technology behind Alipay. You know, it's simple technology that works on the phone. It uses QR codes that you can use on a $50 phone. So, you know, don't let technology drive the conversation, but still focus on what is the problem that we're trying to solve and how do we build from there.
Thank you, Zenon. If I were to string all the points by the distinguished panelists, right, they always talk about simplicity and focusing on the outcome, the output and the outcome of the solutions rather than the technology itself. So I would like to end this particular session with a big thanks to all our esteemed and distinguished panelists, Mark, IT, Zenon, and Charles. Thank you so much for your time, your valuable inputs, and so much of your experience has been distilled into a conversation that, you know, may be potentially controversial, but certainly it's definitely visionary and pragmatic. So with that, I would like to thank each and every one of you, and I wish you the best. Rest assured that we'll be in touch with you after the event for potential discussions and how we can work together and collaborate to create a better banking sector globally. All right. So thank you so much and keep in touch. Thank you to the members of the audience too.